All right. Hey, good morning. It is Wednesday. Thank you for joining us on Market Chat. It's been a couple weeks since we've been here. Kind of ironically, the last two holidays happened to fall on Wednesday morning. And so we used the time to really refresh, and I hope you did too, and re-energize. There's a lot of new subscribers over the holiday. So let me take just a minute and talk to them And so for some of you, this is going to be review. But for those of you that are new, thank you for being here, and we're excited that you've given us a chance to be part of your farm marketing program. As we start this, I want to back up and take a look at why it is that we're here. The reason that we're here is to get better. We're here to stretch ourselves, and we're here to challenge ourselves to make better decisions and to be more focused and intentional about everything that we do on our farm. Because when we make better decisions, our lives get better, we're less stressful, and we are in a better position to succeed longer term. And if you've read the news and the kind of the general culture over the last 12 months, we just came out of a really tough year. I was looking at the news flow from a year ago in preparation for today, and what I saw was really kind of depressing, to be honest, because what we saw was unbelievable supply, just terrible demand news, a strong dollar, and nobody wanted to do business with us, and nobody had a reason to do business with us as we entered 2019. And so that drove farm suicides to an all-time high, that drove depression to an all-time high, and ultimately drove market pessimism to a high. So why are we here? That's why. We're here because we need to make ourselves better, because the market gave us plenty of opportunities to make really good decisions in 2019. So through Market Chat, what we're going to be able to do is we're going to be able to add some clarity to the noise that's out there in the marketplace. We're going to be able to simplify your process and be completely objective about why we're making a decision. And ultimately, at the end of this presentation, I hope that you feel challenged. I hope that you realize that I'm not here to tell a lot of jokes, and I'm not here to be one of the guys with a selfie cam running around just telling you what we're doing on a daily basis. We're here to try to add value. We're here to try to give you meat and to synthesize a lot of complicated information to maximize your time, because none of us have a lot of time. And if you all will spend 20 minutes of deep study a week on your grain marketing plan, you will be a better marketer, and you will be a more profitable farm as a result. I will challenge you all to think back over the last 60 days and then log your time over the next week and count how much time you actually spend diving deep into the revenue line item on your farm. How much time do you actually spend learning how to make better decisions? And I think you'll be shocked that you don't spend any. Yes, we get text updates. Yes, we get some things. But at the end of the day, we really don't spend any time learning about the markets and why we need to make better decisions. So I hope at the end of this, you feel like you've learned something. And that is why we're here, is to make our lives better. So as we start, I'm going to do a quick overview of the fundamentals. We don't want to trade off of the fundamentals, but we want to be aware of them. And I want to make this quick distinction. Fundamental analysts don't look at technicals, and technical analysts sometimes don't look at fundamentals. We like to look at both, but we are at our core a technical analytics group. We trade off of the technicals, but the fundamentals matter to us, because if you don't know that there's a crop report coming out on Friday, then you may be caught blindsided. So we try to pay attention, and we try to put it in perspective of what's happening. So let's talk about exactly where we're at. The news is rampant, and it is all over the place about Iran, and will we go to war or will we not? The updates as of this morning really don't indicate that. It looks like last night's attacks could be an intentional miss, and I encourage you just to read the news flow. I'm not going to try to pretend to know something anybody else doesn't. You all can read the same headlines I do. The question is, what impact does that have to our farm? What impact will that have to the grain markets? And so far, there really hasn't been much. You know, we have this knee-jerk reaction every time news breaks and we fall off. And then as of this morning, you know, we're kind of trading back. I really think you got to look at oil, because at the if oil rallies, that should be bullish corn, because corn is also energy as it's used to make ethanol, right? So the impact in Iran is two questions. One, what's oil? And two, what does China do? Because there's only two big fundamental things that we should really be thinking about on January the 8th. The first is our trade deal safe? That's number one. Will China stay at the table, or will they back up and try to do something different? Are they more apt to side with Iran than they are with the United States? I think that's a legitimate question. As of this morning, there's no news that would suggest anything other than we're still on course to trade, to sign our trade deal and to stay on that path. Now, the second thing that is important, and whether this is number one or number two is up for debate, is the crop report that's coming out on Friday. In contrast to years past, this report has a lot more relevance than it normally would. And the reason for that is because this year there are so many unknowns. There are unknowns in relationship to yield, harvested acreage, quality, and ultimately what's going to be available to be planted next year. So the trade seems to be looking at a slight reduction in yield from the USDA and a slight reduction in harvested acreage of somewhere between 400,000 to 500,000 acres. If they trim yield and they trim harvested acreage, you know, we're looking at the carryout dropping from somewhere from 1.9 billion bushels to about 1.75 billion. That is where the trade is expecting corn to land on Friday's report. Now, 1.75 billion, to put it in perspective, is burdensome. If you look at history, that is a large carryout and wouldn't be the catalyst for a huge bull market. Now, will it ignite a rally this time or not? Who knows? But the reality is 1.75 billion bushels of a carryout is typically not that bullish. So what are beans going to do? Well, kind of similar to corn, we expect the trade expects small adjustments. We don't expect huge radical declines in the bean carryout. If those are going to happen, they'll probably happen later in the year. We're not expecting the USDA to rock the boat a lot at this time. Now, if you read the articles, you can read guys that say, if the USDA doesn't trim radically, then they lose all credibility. You can read articles that say, stop talking about reduction in supply, just deal with it, because the USDA is not going to change anything. You can see both arguments. And so I think the natural spot to land when you read all of the information that's available is to land in the middle and to assume that the USDA is going to be kind of neutral and not take huge swings in either direction. With regarding to wheat, I think we're expecting use and demand to be up slightly, but really not enough to radically change the balance sheet. So I'm not bullish or bearish going into the report. I have absolutely no idea what they're going to do. I will tell you that there is uncertainty. And as we have been talking for months and months and months, 2020 is very different than 2019 because we do have supply side uncertainty. The cash market is so strong, it's telling us that that maybe something is not as if it would otherwise be. It's telling us that the market is moving grain to destinations in an awkward flow. So is that because the quality is bad? Is that because there's more demand than we think? Or is that because the yield is lower? I don't know. We don't have any idea, and we won't know until later. And on top of all those things, there's four supply questions, right? Yield, basis, weather, and acreage. And then there's 4 demand catalysts. You've got the US, Mexico, and Canada trade agreement. You've got the Chinese trade agreement. You've got Japan, and you've got Europe all at the table signing and executing new trade deals. So that's 8 major macroeconomic factors that the trade is trying to digest. So now as we switch to the technical side of the markets and start looking at the charts, for those of you that are looking at a chart for the very first time, let me tell you that there are only 2 things that move a market: buyers and sellers. All the noise that's out there, all of the information and misinformation is boiled down and recorded in history as a tick. It is available for all to see instantaneously, and so therefore we know how the traders are digesting that information. If the market is going down, we know that people are more fearful and the bears are more greedy. If the market is going up, we know that people are more excited, and we know that that the bears are getting more fearful. So as we look at the market, we don't need to try to be emotional about it. We just need to see what it's telling us, discern it, and then take action on it. So what you're looking at is called the Ichimoku Cloud. This is a very simple set of math that goes behind this, and really what it means is past, present, and future. At one glance, we can see where current price is in relation to everything else that's ever happened in these markets. I have March corn up here, and we are sitting looking at this cloud. Very simple and very objective. If the price of corn is below this cloud, it's bearish. If the price of corn is above that cloud, it's bullish. And inside it, it's neutral. Now, there's a whole lot of other things that we can talk about, but I want to make it this simple for you as you enter 2020. Almost every farmer I talk to and every conversation I have is bullish. I'm inherently bullish. Yes, I have a bullish bias, and every single farmer, every single one of you wants to be long the market. And the reality is you are. If you are getting ready to plant a crop and you own it and you have yet to sell it, you are by definition long the corn market. If you're carrying bushels over from last year and they're sitting in your bin, you are long the corn market. So as an objective, unbiased observer, I will recommend to you that you should be hedged going into this report, because a bearish surprise that no one is expecting will send this market lower. So this is a perfect opportunity for, as a farm, you should remove some risk and buy puts in the December contract to alleviate it. Now, I'm not saying you have to make a final cash sale, and I'm not saying that you have to hold those puts for the next 12 months until expiration. That's not what I'm saying at all. I'm saying that today you can take a decisive action and remove your downside risk and take all the emotion out of it and sleep better. You can spend a little bit of money on a put and get rid of that risk, and as it moves lower, if it does, you can sell that put. You can bank the profit and let it ride back up. If you buy the put and the market goes up, you have not lost money because your cash position absorbs the loss, and you can then sell the put. You can take a small loss on the put. You don't have to hold it and let the whole thing expire. But what this is telling us is that the uptrend that started off of this low right here isn't super strong. In fact, this is starting to weaken. Now, can that change Friday and we blow right through this top and go limit up? Absolutely it can, and I'm not saying that won't happen. But the reality is that how do you want to feel as a farmer if the opposite happens and we trade limit down? Where do you want to be? Would you rather be profitable or not? And marketing is really that simple, because your farm break even is between 385 and 405, depending on your overhead structure and depending on how on your input costs. So almost every one of you has an opportunity to not get killed, and this is the first week of January. Take it. So let's look at soybeans. Is the same thing sitting there? I don't think so. Soybeans are a little bit more bullish. Again, if we're above this cloud, we're bullish. If we're below it, we're bearish. We're trading above it. We have everything on this chart looks to be more bullish than not. If we jump out and look at November beans, it's the exact same. There's nothing signaling selling. Now, like corn though, as a farmer, you're profitable above somewhere in the 9 to 9.20 range if you have an 80-cent negative basis. You should be able to eke out a profit above that level. So soybeans are sitting at somewhere around a 40 to 50 cent per bushel profit margin for the end of the year. And so in theory, you could lock in all your inputs, sell all your soybeans, and just farm for the year. The market is giving you that opportunity today. I'm not saying you have to go sell all of it, but picking up puts before this report is not a bad decision. And I'll be perfectly blunt. I hope that that is that I'm dead wrong and that that is the worst timing advice ever. But I want to be clear, that's not a speculative statement. I'm not telling you that the market is going to drop or that it's going to go lower. I'm telling you that your farm profitability can be protected by buying puts today. And then you can just sit back and see what happens and just enjoy the ride. That sounds like a pretty good way to start the year to me. Wheat. Wheat is a little bit more challenging because we're not quite into that profitability range. The math I'm using is that we need July wheat to be about 540 to 520 in order to really bank a profit. So we can hedge it here and maybe pick up some if it falls. Wheat's in the strongest uptrend of all the grains. We've been bullish wheat for a long time, but I don't know how much more room it has. There are no sell signals on this chart. There is no weakness. We're above the cloud. The cloud is trending higher. The trend lines are moving higher. Everything about this suggests that this is a temporary pullback into a further uptrend. But if you're highly leveraged as a producer and you don't have any wiggle room or extra margin with which to defend your balance sheet, then buy puts on it, because this report could surprise people. And if there's anything that you should learn and take from 2019 into 2020, it's that the market can do whatever it wants. It doesn't have to buy into the bullish fundamentals. It can disregard them for an extended period of time. There's an old saying that the market can stay irrational longer than you can stay solvent. And that is a very apt quote to end 2019 with, and a lesson that should be learned moving forward. So the takeaway for today as we conclude is that we have a big report coming in. We have a lot of geopolitical uncertainty and instability, and none of us know the answers to how any of those things are going to be taken out. And the market is presenting you as a farm with an opportunity to not lose money and keep your upside open in case all these things do end up bullish. So my advice for the first week of 2020 is to shed some of that risk, get it out the door, preserve your balance sheet, take care of yourselves, and look forward to continue fighting another day. Because for me, I definitely want to feel relaxed if the market crumbles, not panicked. So that is the major takeaway, and that is Market Chat for this week. If you have enjoyed it and have felt like it was somewhat meaningful, please forward it on to somebody else that you know. Referrals are how we grow this business, and we are very grateful for those when they come. Like us on social media, please find us and help spread the word. That is something that you could do for us and would be very meaningful. Thank you for your time, and I hope to talk to you again next week.